Welcome to my daily report videos with me, Richard Perry, market analyst at Hantec, on Thursday the 2nd of May. We've got a reaction to the Fed meeting last night. The Fed didn't really do a great deal with regard to changes to monetary policy, kept rates flat as expected, no real change expected. However, what we did see was a slight change to the statement with regards to inflation. It sort of acknowledged the fact that inflation had fallen away. The core PCE, for example, has dropped to 1.6% recently, back from its target of 2%. Now, the Fed acknowledged that. However, in the press conference, Jerome Powell suggested that this was transitory, and subsequently the markets did respond fairly strongly in the wake of that, where we saw Treasury yields, which had been sort of the 10-year, you can see here, Treasury yields, which had been sharply lower, responded quite strongly to the upside. So unwinding that move, 246 it got back to, so it's already unwound 7 basis points from that point, and it continues to respond higher today. And that 2-year, for example, even more so, around 10 basis points of response from that low, from the point at which Jerome Powell talked about it being transitory. Now, that is an important factor because it's driven the dollar a bit of a rally. Although it's consolidated a touch today, the dollar has managed to engage a rally off the lows that it saw yesterday, and that is affecting across the major pairs. We saw euro dollar coming back from 12.65. We saw dollar yen rallying from around 11.30. So I think that this is a key mark, and also we've seen that the gold price, which had been consolidating, picked up a little bit in the response to that FOMC statement, but then fell back sharply on the comments from Jerome Powell. So there has been a significant move on these markets. We also saw equity markets falling back. The S&P 500 falling back from a position of strength to a little bit of a corrective candle that we saw yesterday, for closing at the day low. So it'll be interesting to see how markets in the US respond to that today. Currently, futures are a shade higher, but that was quite a considerable intraday turnaround, and whether it's an excuse to now lock in some profits will be key. Now, the reason being, because all of this is that basically it starts to look as though the market will be pricing out the prospect of a rate cut. If the Fed is correct and inflation is transitory, and it starts to pick up again, there is little real pressure on the Fed to cut interest rates, which is the expectation at the moment. It was around 65% yesterday. For a December rate cut, is now around 50%. According to CME Group FedWatch. So a real significant response to this Fed meeting that we saw yesterday. Now, in terms of data points today, we've got the Eurozone manufacturing final PMIs, and that's come out this morning. And that's actually a shade higher on the flash reading, but it's interesting that we saw Spanish data, Italian data and French data all upwardly revised. However, Germany was a slight miss to the downside. So we only saw a very small upward revision to that Eurozone flash data to the final 47.9. We're also looking out for the UK construction PMI, although it only accounts for around about 7% of the economy, so it's not likely to be too much. And then the main point today will be the Bank of England rates decision at 12 o'clock UK time. Expected to see no rate hike or no change to asset purchases either, so both staying at 0.75% on the interest rates, and 435 billion on the gilt purchases, and a unanimous decision across the board there for those rate moves. So that'll be interesting to see how the market responds. Also to the quarterly inflation report for the Bank of England. It is Super Thursday, so you get the quarterly inflation report today, and yes, it will be revisions to growth and inflation forecasts there for the Bank of England. So that takes me to my chart today, which is silver. Now, silver, I believe, is Well, certainly the pressure on 1490 has been growing. Little intraday breaches last week, but didn't really hold on to that. But now failure at 1508 has formed another lower high, and I've just mildly redrawn that downtrend, but it still is a downtrend at play with lower highs and lower lows, and now a decisive close below 1490. Coming alongside, you've got the negative configuration on momentum indicators across the board, falling over momentum signals, and closing at a new 4-month lows. Really does open the downside, I think. So you'd be looking to sell into strength on this silver chart. I think anything around sort of 1470 up to 1490, perhaps up to that downtrend, which currently falls around 15 big figure today, but I think a retest of 1446, which is that reaction low from December, is likely, and if that breaches, then you're looking at 1385 to 14 big figure. So could be further downside potential is seen in this chart, and yeah, I think selling into strength now on silver. So with that in mind, I wish you good luck in your trading, and I'll speak to you later.